We've all heard the story before. In fact, at this point, it's a story as old as time. Amazon, the big juggernaut company, is this massive company that never makes any money. That's how the story goes. For as long as I can remember, and probably as long as you can remember, Jeff Bezos started a company that has grown very large and it never can turn a profit. And the last couple years of full financial results have shown the same thing. In 2021, Amazon posted a free cash flow. Free cash flow is the metric we use to see the real profitability of the company, how much money it's actually generating for shareholders or excess profits. It was minus $14.7 billion. In just 2021, 2022, minus $16.89 billion. 2 consecutive years of losing above $10 billion for a company that currently has a market cap of $1.6 billion. This is a massive company that never makes money. Now, also part of this story of Amazon is that they can turn a profit if they really want to. It's all just a decision. They can turn the levers, they can make a profit once they're done making such enormous investments. This is the idea that after all of this investment, all of these gains that they've given up, so much time period of reinvesting back in their business, at the end of this rainbow, there's going to be a pot of gold, a massive amount of cash flow that Amazon finally generates. It'll be a geyser of cash flow. Now, to a lot of people, the idea that Amazon will eventually have these enormous profits down the road is wishful thinking or naivety. And I understand that. It's hard to look at a company that's been losing money for so many years and then assume it's going to make a bunch of money, but that is exactly what I'm doing here. I believe that Amazon is going to be incredibly profitable. And I think the time has finally come for this storyline to take a different arc, for it to have a different ending. I believe that it's not only going to be profitable in the future or years down the road, I believe Amazon is going to be profitable this year. Very profitable this year. Over the past couple of decades, Amazon has made essentially no money. They've had negative free cash flow, tiny bits of positive free cash flow. Only in 2017 to 2020 did they actually post positive free cash flow. But the most they've ever posted in the history of the company in a single year was in 2020. Which was $26 billion. $26 billion is a lot, but that's not nearly enough to justify a company that's worth $1.6 trillion. And this again is the record. Every other year has been negative. My prediction is that this is all changing, and it's changing right now. It's happening before our eyes. I believe in 2024, Amazon could have upwards of $60 billion in free cash flow. That's right. To put that in perspective, on this chart right here is the $30 billion mark. So this is 30. 60 would be double this, which would literally be off the charts. We'd have to double it, go way above the chart. It's going to be outlandishly huge if this happens. Now, again, saying that it's going to have $60 billion is not something that's guaranteed or insured. This is a guess of mine, but I want to explain why I have this perspective, why I believe Amazon can generate these enormous cash flows this year. It has to do with their monetization. This is a deliberate change that Amazon is doing, and they're doing it in all parts of their business. The latest news, and I believe the biggest news, is how much Amazon is moving into advertising. We've talked about AWS. We talked about Amazon's Prime business. This is the major catalyst. This is something that is enormously profitable that Amazon's pushing directly into head first. From Hollywood Reporter, Amazon is about to eat the TV universe. Now, this write-up is extensive. I've highlighted some of the parts that I want to go through because I think it's excellent, and it highlights the strategy that Amazon is doing going into TV, and is specifically what they're doing with advertising. Now, it must be said before we even go into this that I could be wrong. Maybe Amazon won't generate enormous profits this year, but I stand by my prediction, and I do it with an enormous amount of my finances. I have over $65,000 of value invested in Amazon. That's a large amount of capital in a single holding, and it represents my conviction and belief that this company will become extremely profitable. So I'm aligned with my opinions financially. I'm not just sitting on the sidelines throwing out opinions. I have money behind this company. Now let's go ahead and take a look at this article because it highlights a major move that Amazon's doing. The Hollywood Reporter makes the claim that Amazon is about to eat the TV universe. That's a pretty big claim, but I think it's actually backed up in this article. Mark your calendars on January 29th, so the end of this month, Amazon will unleash what one top advertising executive calls, quote, a tornado that will upend the streaming video landscape. the company will flip a switch and turn on ads for all of its Prime Video viewers. That's incredible. They're not incrementally doing this. They're not slowly feeding people into it. They're just doing it. Everyone that is on Prime is going to have advertising. Now, users will have the option to pay $3 a month to remove the ads, but as the executive says, almost no one will do that. Are you kidding me? I think the executive's right. Who's going to pay the extra $3 to remove the ads? A couple people, some people that are really against ads. I think most people are just going to live with them unless the ads are completely obnoxious. But knowing Amazon, if they implement this correctly, most people are just going to deal with a few extra ads. After all, people are paying Amazon for the fast shipping. Reacher and Thursday Night Football are thrown in there for free. That's exactly right. Most people view Amazon Prime membership as paying for fast 2-day shipping. And all the other stuff are just things that are included with that other thing they're paying for. So people aren't going to be as upset about this as if another streaming service like Disney just made everything have ads and that's all you're paying for. This won't have quite as much backlash because of the entire value proposition. Now, this again may not seem like a big deal because Amazon's saying they'll have limited ads and it's just going to be something they introduce slowly, but the move will instantly turn Amazon into a streaming ad juggernaut and the largest ad-supported subscription streaming platform in the marketplace with tens of millions of users, leapfrogging the likes of Netflix in the process. Overnight, Amazon's going to go from last place into first place. They didn't have really any ad-supported streaming besides Twitch and Freevee, these little platforms that don't make much money. Their main streaming service, Amazon Prime Video, didn't have advertising. And all of a sudden, overnight, every single user is going to have advertising. Amazon, run by Andy Jassy, has always been coy about just how many subscribers it has. But the latest tally in 2021 was that they had over 200 million subscribers for Prime. And their retention rate's incredibly high. So my guess, this number has gone up since 2021. Now, no one is disputing that Amazon's reach is unrivaled. Consumer intelligence research partner estimate that there are around 168 million Prime subs in the US alone as of 2023. 168 million in the US. If just half of those subs watch Prime Video content, it would be comparable to Netflix penetration in the US, 77 million, and significantly more than the likes of Hulu and Peacock and Paramount Plus. So just to go through these numbers here, some of them are estimates, they're not set in stone, but this is based on the data we have. 200 million people that are subscribed to Amazon Prime. They estimate around 168 million of those are in the US alone. If we assume that half of them watch Amazon Prime, which is a big judgment call, but I believe that's roughly correct, that is around 77 million people, which is the same level as Netflix in the US. So the big assumption here, the big takeaway, is that Amazon Prime Video is about as watched as Netflix in the US, which Netflix is obviously incredibly successful in the US, which would make Amazon Prime Video incredibly successful in the US. Now, you may believe, doesn't that put them on equal footing in advertising? No, because most of Netflix subscribers are not on the advertising tier. And soon, everyone on Amazon's Prime membership, all 77 million of them watching, are going to be on an advertising tier. That is the enormous distinction between the two. They say most Netflix users, however, are not subscribed to the ad tier. In November, it was roughly 15 million. Now, this article is a few days old. We just recently heard that it went from 15 million to around 23 million. So Netflix gained roughly 8 million new ad tier subscribers in roughly 2 months, which is incredible, but it's at 23 million users. If we go back to the story here, again, we're assuming that Amazon Prime has 77 million viewers in the US. So we're comparing 23 million of Netflix to suddenly 77 million of Amazon. Amazon will instantly have an advertising scope on Amazon Prime Video that's 3 times the size of Netflix's. They're already going to be at scale immediately. That scale in both subscriber reach and real viewership has analysts thinking that Amazon will be able to scoop up billions of ad dollars. Now, they don't really know for sure how much money this will make, but there's some analyst estimates on it. Justin Post from Bank of America says that initially it will make at least $5 billion. And they assume that most people will not switch to the paid version where you remove ads for $3 a month. But either way, this will instantly add billions of dollars of incremental revenue that's high margin for Amazon. Their advertising has to be some of the most high margin revenue they make. It's that instant scale that has marketers excited and competitors concerned. Prime Video with ads will be premium video, including drama, comedy, library fare, as well as live sports, NFL, and NASCAR. They say that this is the content breadth and reach of television, traditional television, with the targetability of tech. We've all seen how profitable the advertising business of television has been all throughout history, and not just cable TV, but even linear television. Now, the difference here is they're going to be able to show unique ads for every single individual, because as we know, Amazon has this unique advantage with knowledge that the television studios didn't have. Amazon knows your shopping history, because half of your shopping that you do online is with Amazon. This unleashes potential that we have not seen before, not with this scale and this much information. Kevin Krim, the CEO of Ad Measurement from EDO, estimates that Amazon could see CPM, that's like the rate that you're getting per thousands of ads, of around $50, which is really insane. On YouTube, you get nowhere close to that. You might get up to that point like one time with one video in some really obscure niche, but most of the time the CPM's around $10. So $50 a CPM is literally 5 times as much as the average YouTube video is making. That's below what Netflix sought when it got into advertising a little over a year ago, but still a big premium over linear TV. So Netflix right now is considered the most premium to advertise on, and they did hit CPMs that are incredibly high. But at the scale of Amazon, having 77 million viewers and having a $50 CPM, that would be incredible. Now, they mention here that at least in the short term, advertising is a zero-sum game. When an agency or marketer decides to commit a budget to a new player, it is usually at the expense of someone else. Every company has an advertising budget. And whatever that budget is, that's how much they're spending, and they try to allocate that capital to get the best ROI. So they're looking for the best platform to advertise on. And where is this advertising money coming from if it's going to Amazon? It has to come from somewhere. Is it coming from Netflix? If it's coming from Netflix, that's a problem for me. Luckily for us Netflix investors, it's not coming from Netflix. You might not be aware of this if you're younger and you just watch TV services, your Amazon Prime, Netflix, and HBO. But linear TV still has an enormous amount of advertising spend. It's still huge, and it's slowly dying. The point of no return for pay TV is nearly here. It's on a long path to death. Right now, around 71 million subscribers pay for a traditional TV bundle. Isn't that insane? This is like Spectrum. We still have 71 million people paying every month these extreme prices to watch the super ad-filled content of traditional TV bundles. But they're estimating the percentage of households without pay TV. And notice this estimate going up over time. From 2015, it was 20%, 21%, 22, 23. We're now in 2022 right here. This is the last data we officially have was 38%. And they believe this trend will continue at this cadence. 38, 44, 49, 53, 57, 59. As time goes on, 3 years, 5 years, 10 years in the future, the money from this pie, all of this budget being spent on traditional TV, it's going to Amazon, it's going to Netflix. And this should not be shocking to anyone. We can literally see this process playing out right before our eyes. Amazon and Netflix are gaining subscribers. Netflix just gained 8 million ad tier subscribers, while the linear TV bundle's currently losing it. So that money's shifting from one pocket to the next. Now, the thing I think is worth noting here, the thing that's so different about what Amazon's doing is how abrupt this change is. Most streaming services introduce an ad tier. It's like their lower end tier where you can pay a little bit, like $5-6 a month, plus you have ads. That's an option, and then they have many other options that are ad free. And so anywhere from 30 to 40% of people sign up for the ad tier. The other 50-60% of people sign up for the paid tiers with no ads. And this is a transition. So far, the other players like Netflix and Disney and HBO, Warner Brothers Discovery, they're trying to slowly guide people into the ad tiers over time. What Amazon's doing is entirely different. It's nothing like that. They are overnight making every single subscriber of theirs move to the ad tier. No options, no debate. Amazon's saying, sorry, there's ads, deal with it. And an important thing to note in this transition is executives at multiple companies have said that they make far more money per subscriber on the ad tier than they do on the ad-free tier. And this is true. On Netflix, for example, their ad tier only costs $7 per month, but their average revenue per month from those users with the ads they watch is around $15 to $16 per month. So they make more money from the ads than they actually do the $7 you're paying. That's how big the ad tiers are. You pay $7, they get 16 in total revenue. With Amazon doing this all at once, ripping off the Band-Aid, moving every single subscriber from their paid tier to the paid tier with ads, they're increasing their average monthly revenue by at least $3 or $4 per user per month, which adds up to an enormous amount of money. Now again, if we rewind and go back to this tall tale of Amazon being this company that's been around forever, it's grown to huge size, but it never really makes any money. It never makes any profits. And that's been the case for the past 20 years. Well, we've always held the idea that they could eventually make profits at some point if they really chose to. What I'm arguing today is that they're choosing to now. Amazon wants to make profits today. They're doing things right now before our eyes to make profits today. We've seen the news that they're cutting down on employees through Twitch and all different studios and all different parts of their business. Reducing costs is part of making profits. That's what any mature business does to try to optimize for margins. But the other big part of this is turning the levers of profitability, which they're doing across their company. This move, which is a substantial move, is a clear indication that Amazon is wanting to make profits this year. So again, we look at this chart here. The free cash flow per year, throughout their history, their record high is $26 billion of free cash flow. I'm arguing that they can get up to a number of around $60 billion this year. Maybe this won't happen. I don't know for sure. I can't see the future, but I believe Amazon can hit this number this year if they really make the right moves, and I think they are. I first want to look at a couple examples of what Amazon's doing. First of all, if we look at the amount of expenses of Amazon, you'll also notice another trend. So let's go ahead and bring up the expenses chart here. This shows the combined expenses in a stacked bar chart. We have the Capex, sales and marketing, general and administrative, and research and development. Now, over time, Amazon has grown their expenses either in line or even above what their revenue is. But if we zoom in over the past 10 years, for example, we can see that the expenses grew a lot in 2020 and 2021, and they're starting to flatten out. Not even flatten out, they're starting to go down. If we look at the Capex, which is by far their biggest expense, this is where they really have a lot of their free cash flow determined, because as we know, cash flow is calculated by taking the cash flow from operations and subtracting the Capex. So the less Capex you have to subtract, the more free cash flow you'll have. You'll notice that Amazon maxed out their Capex spend during their investment cycle from 2021 to 2022. It all started in 2020 when they had an influx in demand. They've done these massive investments. They've built enormous amounts of warehouses, factories, machinery, equipment for employees. They've bought new fleets of vans and airplanes, everything to run their business and double the size of their network. But those are largely behind them. There's going to be some lingering Capex expenses, of course. With a business this capital intensive, there's always going to be Capex expenses. But the rapid expansion is behind them. And the Capex is going down overall quarter by quarter. Going into 2024, the average will be much lower than 2022. It might even be around half of what 2022 was. So as Capex goes down, that has a direct impact on the amount of free cash flow. And if we look at the sales and marketing here, isolated, we can also see that the sales and marketing peaked and it's now flattening out. They're keeping this under control. And we even have news again that they're letting go of some employees. That's unfortunate for the employees, but that does have the effect of raising margins. We look at the general administrative. Again, it peaked in 2022. It's going down. It's headed down quickly, and it will head down even further as they do additional cost-cutting efforts. Research and development. Amazon buries some of their costs here. This is running AWS and different things. This has gone up at a steady cadence. This one doesn't look like it's slowing down as much, but overall, the other three main expenses, Capex, sales and marketing, general administrative, are all either leveling out or going down dramatically. Another chart that we can look at is while this is happening, while expenses and Capex are going down, the revenue continues to grow. So this isn't a story of them paring down on their expenses because their revenue's flattened or it's going down. No, Amazon continues to grow revenue. You can look at the chart right here. It very clearly shows a company that's growing over time. When you have a company that can grow its top line revenue while keeping expenses flat or down, like Amazon's doing here, that is called operating leverage, and it leads to margin increase, more profitability for the company. The most important part of Amazon's business are three different verticals. We can look at them on their last financial report. This is taken from Q3 of 2023. We have the numbers right here. We're not even going to go over the lower margin parts of the business, like the first-party sales or physical stores. The reason that Amazon has these businesses and builds them out is because they're a crucial part of layering upon the more important, profitable, higher margin businesses. You can view this in similar fashion, although not identical, to Costco building out warehouses and selling stuff so that they can really sell what they want to sell, which is their membership, the higher margin portion of their business where they make most of their net income. This is similar with Amazon. Amazon builds out their first party business. They own physical stores, all as part of running this big company where they can have the higher margin portions. If we look directly at the higher margin portions, we first have the third-party seller services. This is where Amazon does a lot of services for sellers and they charge them a fee. Amazon has a much higher margin on this than their first-party sales. But this still is not the best part of the company because it relies on a bunch of Capex, a bunch of legwork. They have to ship stuff. They have to fulfill stuff. This really isn't a free lunch. When we get down further on this, we get to the really high margin portions of the business. There's a couple crucial ones here. AWS is one of them. AWS is a money printer. It's such an incredible business. They're hosting the IT for a huge portion of the web. All of these tools you can build upon. You can build any website on it. I've hosted so many websites on AWS. It has everything you need. And this is a very concentrated industry shared between Amazon's AWS, Microsoft Azure, and Google Cloud. They're the three big winners of this category. Right now, this makes up $23 billion per quarter. $23 billion, if we extrapolate, if we go out 4 years, that's at least $92 billion a year. That's the run rate of a $23 billion per quarter times 4. So that portion of the business is highly profitable and enormous, but then we have the advertising portion. Advertising really came into play not too long ago, just a couple years ago, and now it's becoming the most profitable, biggest portion of Amazon. And I'm not saying this just to be bold or provocative, I'm saying this to be accurate. Amazon has the best advertising business of any big tech, including Google and Meta. Theirs is better because of the targeted nature of their ads. Not only do they advertise and earn $12 billion, largely from Amazon.com and showing sponsored listings, but now they have the opportunity to grow this number dramatically through Amazon Prime Video. 12 times 4 gets us to $48 billion, but it's also growing 25% last quarter. So it's a $48 billion run rate, but it's almost certainly going to earn a lot more than that by the end of 2024. It's growing every single quarter. And to add to this growth is going to be the massive switch from Amazon Prime Video being no ads to every user having ads. Now, we don't know for certain whether this will add on $1 billion per quarter, 2, 3, 4, or 5, but we do know for certain that this is very high margin revenue. It's highly sought after, and Amazon's moving into it in a very big, aggressive, immediate way. It's going to impact their bottom line a lot this year. And like a lot of other changes they're making that are working their way through, lowered expenses, raising the prices on seller services, introducing ad tier for every single member all at once, cutting down on employees. Amazon is making decision after decision after decision to pull the levers of profitability. So my expectation for Amazon is this is going to be a big year. I think that this is finally the year in 2024 that they make some money. They make a lot of money. We'll see what that number ultimately is. And again, this is just my prediction. I could be completely wrong, so take this for what it's worth. But I'm invested in the company. I'm hoping to see big things. Let me know what you expect. That's all for this one. I hope you enjoyed. See you in the next one.